Now we're looking at the latest from the corporate earnings season. The next few minutes, the Swiss drug maker posted a rise in sales and income and pretty much match analyst estimates with profit of just over $2.4 billion. Novartis. So let's find out what it all means from one of the world's top 5 analysts on this stock. Stephen Pope from Cantor Fitzgerald joins me in the studio now. And Stephen, we'll get to Novartis in just a moment, but I wanted to start by asking you about GlaxoSmithKline. Of course, we've just had that breaking news coming into us that they are going to record a £1.57 billion legal charge, this over the controversy of their Avandia drug. What do you make of that?
I think it's just a very typical example of one of the many pressures that branded pharmaceutical companies face. Even if you have a product that's been approved and is out in the marketplace, if it's not achieving exactly 100% of what's expected from it, then suddenly one can be laid open to many sorts of charges. And that's why they're having to set aside money for this cause.
Seems to be the case, doesn't it? Because a panel advising the FDA said earlier that this drug could remain on the market, but it doesn't seem to be out of the woods yet. It seems that it could still be facing the prospect of withdrawal in certain markets.
Certainly that is the issue, and I think what you find is that every sort of region of the world has its own sort of authority as to whether or not something is licensed and cleared to be put into the public domain. And certainly I know in Europe we always have an issue that the Americans don't seem to accept whatever the Europeans will rule.
So what would that mean for the company, for Glaxo, if Avandia was restricted or removed in some way, given that it generated, what, over £1 billion last year for the company?
Well, it's two-hit double whammy, isn't it?
Yeah.
They have a big legal fee to pay, and then suddenly one of their large cash cow parts of the revenue is pulled away from them, and so they've got to struggle to try and find a replacement, and they probably can't in the short term.
And how could this latest news about its legal costs impact its share price at the open?
Well, I would imagine that you'd find that the share price would be under pressure because they'll have looked at comparative numbers, like with Novartis, and say, well, how is Glaxo in future going to be able to match up to that type of performance, particularly if this drug is withdrawn? So I think it's going to put it under pressure.
Now, the other big drug maker we're looking at this morning is, of course, Novartis. They reported some pretty strong numbers. Profits are up. Sales have also increased. What is driving that picture?
I think you could take 5 years ago, Novartis was struggling. The pipeline was almost barren, anything coming through. They've made great strides since then. They've recognised the pressure, so they've become very strong in innovation. A lot of joint venturing with biotech companies or securing the rights to do trials on, as of yet, unproven medicines that prove, in fullness of time, to be very successful. Also, they're very strong by making that move into the generic space. They recognise that that was going to be an ongoing threat of competition to them as sort of patent levels will sort of diminish in their time.
That seems to be among the challenges facing many pharmaceutical companies right now: tighter state budgets, tighter regulation.
That's right. And 5 years ago, when Novartis made the move to buy Hexel and Aon Labs, many of the other branded pharmacies said, no, what are you doing? This is sacrilege. But it actually has proven to be a very shrewd move.
Now, interestingly, Novartis wants to expand its share of the ophthalmology market and diversify beyond medicines. And to this end, it's proposed a merger with Alcon. Tell me about that, because the board of directors has raised some objections. Is that deal going to go through? It
will go through eventually, but it's always an issue about the price. And I think we're looking at end of third quarter, perhaps fourth, to finally tie this down. And the reason why they want to be involved in that is you look at global population growth, massive growth in terms of the developing countries. People there are in desperate need of eye care, whether it be through glasses or through sort of solutions to help their eyes. And so that's where Novartis can actually win again by earthing a very good chunk into that revenue stream.
Stephen Pope, Chief Global Market Strategist from Cantor Fitzgerald, thank you so much for your time. We appreciate it.